take you up. Let me show you. Todo. Oh God, let me see my behind down. It's so sad. Happy Women's Day, everyone. So, oh my God, so excited. Lily, calm down. We have a few minutes before our next meeting, so let's get it in. So what I want to talk about today is a little tip for high income earners. What a perfect day to talk about it, right? It's Women's Day. We have a lot of women making some crazy strides in their career, winning on all levels. And I know a lot of people are getting bumps in their paychecks. And so I wanted to have this conversation to help those people that are experiencing, either a promotion, increase in pay, or that already high income earners. Before I give my tip, it's important that we understand how taxes work. So the way taxes work, and I'm just going to give ball numbers, but I'm going to make sure that I put the exact numbers, especially the rates for 2021. So those that are planning can plan ahead. Right now, we're still filing 2020 taxes, but that's already late. So this is for planning for the future. So here's the first thing. So the way taxes work, you get different tax rates based on the bracket of the income. Okay, I'm going to simplify this. Because a lot of times when somebody starts to make more, they feel like, if I'm in a 22% tax bracket, all of my income gets taxed at 22%. That's not true. So tax works in incremental ways. So let's say if you're making $0 to $9,000, for example, and you're a single person, you get taxed at 10%. If you start to make 9,000 all the way to 40,000, that money will get taxed at 12%. So your first 0 to 9,000 is still taxed at 10%. 9,000 to 40,000 will be taxed at 12%. If you start to make 40,000 to 85,000, you'll be taxed at 22%. Now, from 25,000 all the way to about 160, you'll be taxed at 24%, I think. And then beyond that, you go to 32% and then 35%, of course. So I want to talk about this because there's some women that, could be in the 12% bracket, right? And they're getting ready to get a jump or a bump. Okay, or let's talk about someone who is already in the 24% bracket, but is getting ready to get a promotion or to get some additional money coming in that will put them in another bracket. So that income that will come, they will start being taxed at that new bracket. So what I want to suggest is consider putting more money into your 401k and any pre-tax accounts like an HSA, an FSA. If you have kids, the dependent care accounts, you want to put your money towards those accounts because they don't get taxed. So what will happen is because you're putting more money towards for your retirement and all these pre-tax accounts, your health savings accounts and all that, it keeps you from going into that new bracket. It keeps you in your prior bracket. You're still making more money, but you're saving your money to use it for other things and saving taxes. So a good example can be, and I want to use the exact numbers for this one. A good example might be someone who is making 86,000 or 85,000 right now, right? And they're in the 24% bracket. So every money that they make past that 86,000 all the way to 164,000, all of that money in that bracket, remember, is taxed at 24%. Whatever they were making below 86, that means whatever they made from 40 to 86,000, that was taxed at 22%. Whatever they made from 9,000 to 40, that was taxed at 12%. And then of course, anything below was 10. So now they're making, they're making 64,000. Yeah, that's the rate. And they're getting ready to get maybe a new bump into their pay. That will put them in the 32% bracket, right? Which means every additional income that comes in will be taxed at 32%. So what I would suggest is, let's say you're making 164,000, you're in the 24% bracket, and you're going to be getting a bump of about 20,000 or even $30,000. That would instantly put that income in the 32% bracket. So what you want to do is take that money, put more towards your retirement, put more towards your health savings account, put more towards your dependent care if you have any of those. That way, you're still earning more. You're in the new bracket. However, your taxable income, that means the money that Uncle Sam gets to tax, is the money that stays in the 24% bracket. Okay. If you have any questions, please feel free to reach out to me. I'll be happy to answer that. But I just want you to find ways to keep back more money in your pocket. I mean, there's some people that cannot avoid it. They're still going to have to pay their fair share of taxes. But I'm hoping that we could give you other options, like even starting a business, and just other things you could do to help you also limit tax liability. When you're an employee, our options are not as many, but that does not mean they're not there. They're there. That's why you have to talk to someone who knows their stuff, like your finest Abacus finest CPA over here. But other than that, I hope you guys have a great day. I'll be doing a lot of these tips because I think we've had such a good feedback from them. Even one of my clients, Gwen, she suggested a tip a day. So you guys just give me till tax season is over. I'm going to bombard you. I mean, I'm like a whole content library. Everything about me. So get ready. Be safe, you all. Enjoy the Women's Day. Men, make sure you take your woman out and spoil her today. Women, if you don't have a man, you spoil yourself. You deserve it. If you make good money, treat yourself. Take care, everybody. Be safe. Bye.